All right. Thank you, everyone, for joining us this Thursday afternoon. My name is Caleb Tingstad. I'm a lawyer at Beresford Booth in downtown Edmonds. And joining me today is a very special guest. This is a man who only recently joined the insurance industry, is Dave Taylor with FirstMark Insurance Group. Dave, you said 36 years in the insurance industry?
It's right around that number. Yeah, Caleb, I actually quit counting a while ago, as you can imagine. But yeah,
Fun.
it's
Sorry to
been
bring it up.
2 years.
So, I think the title kind of speaks for itself here. Frequently, we have small business owners, both, from the startup standpoint to, growth and exit, who are always looking for, more help with respect to their insurance issues. And so we want to talk about, just some sort of high level insurance questions that we frequently get. And, not that these are necessarily going to be answers to every single question, because every single business is unique and different and, requires both, legal advice and insurance help that is specifically tailored to your individual business. But hopefully, these can serve as some launching points here, can maybe trigger some additional questions for the folks that are watching. And at the end of the day, we're going to have our contact information at the end of this. So if you've got any questions, obviously you can reach out to either Dave or myself. So the first point here, Dave, is what are some of the common insurance issues that you see with startups? I mean, when people that are just getting going here, what are some things that you frequently see?
Yeah, great question. I think probably the first thing that comes to mind as an issue for a startup is they don't think about the insurance piece.
Yeah.
Until the day before they're opening their business, and they have this oh my goodness moment, and they realize they need insurance, and they think they're going to be able to call up and get it placed very quickly. Sometimes that's the case. We can do that, right? Depending on the nature of the business, how complicated it is, and how many moving parts there are. But I think the biggest issue for someone to consider as a startup related to insurance is the sooner in your business planning process, the better to engage with an insurance professional to help you figure things out. Because depending on, again, the kind of business you have, the market right now, it's a really tough market out there. So it could take 3-4 weeks to actually get some quotes back and nail everything down. So don't leave it to the last minute, I would say, is the first thing that I would recommend. Aside from that, just make sure that you find someone that you can partner with on the insurance side, that you can fully explain everything about your business, not just what you're going to do on day one, but what your plans are. I think of a client we had recently that was starting up a business, and if we hadn't had that conversation about the master plan of where we're going, we would have gone down one path on their insurance. But when we found out that they were going to start this business, and then ultimately they were going to franchise it and go across the country, it changed, really the foundation we wanted to lay for that client. So it's really important that you're able to share with somebody what your plans are, so that you can have a well thought out insurance proposal put together. From there, I guess things to consider.
And Dave, here, let me just piggyback off of that point, because I think too, even from the legal side of that, I always tell clients that we do a better job when we have it's the relationship starts early, and we're able to know really everything about the business, because the way that you structure a business just from an entity formation standpoint is very different depending on which direction you want to take it. So I would say it's not surprising at all that even from an insurance standpoint, that's the same. I mean, the more information that we have, and also I find that a lot of people, for better or worse, don't quite know where they're headed, and having that conversation from the outset can be really thought-provoking for a business owner, because you're forced to confront that issue and be really thoughtful about it.
Yeah, well said. We at FirstMark, a few things I'll say real quickly is, we do personal line stuff at our agency, but also commercial. And for most of our agents, The commercial part is the fun part, because you get to be involved with the business owner who's thinking about what are their plans, how are they going to grow their business, and so it's just fun to be a part of that. And you're right, it can be very thought provoking. So that's important. And then the other thing I would say is just a recommendation to your folks that are listening to this, that if possible, find yourself an independent agency to work with. Independent agencies, but the name independent means that their fiduciary responsibility is to you. They work for you. They're not beholden, excuse me, to any one company. They're going to work for you. Then they can go out to all the companies that they represent and try to find the best fit for you. So for business owners, that's even more important, I think, than it is for a personal lines client. For businesses, because there's carriers have different appetites. So to have multiple options, that's really good. What I was going to share with you, I think, just to that question again, common insurance issues for startups, is also just coverage. And I don't know if we want to talk about that, go into talk about like what we recommend from a coverage perspective.
Yeah, go for it. That'd be great.
Okay, so really any business is going to need to have liability insurance. Okay, liability insurance is that portion of your policy that protects you from lawsuits from wonderful people like you, Caleb, that that are going to sue you for things that your company did that that they feel either from whatever was misrepresentation or inadequate work product or bodily injury, whatever it could be. Your general liability policy is going to protect you from some of those elements. And so as a baseline, that's something that every policy should cover, is the liability, and then also probably an umbrella policy on the end of that. From there, coverage really depends on your business. I mean, we could talk about every business is going to need property coverage at some point, which is going to cover your buildings or your tools or your equipment, your computers, whatever business. Every business has some element of property. So there's usually a property portion that comes with that. And then cyber is something that a lot of business owners don't consider. But if you are touching any information, personal information, whether it be credit card information, things like date of birth, name, address, these things are all considered personal information that you are tasked with guarding and protecting. If you're touching any of that, a cyber policy is really something that every business should have. There's professional liability. If you're in the services industry where you're making recommendations and giving guidance, there's professional liability coverage we should consider. If you have any employees, there's something called employment practice liability insurance. We call it EPLI. That is, so if you have any employees, it's going to protect you from your employees suing you for anything you do as the owner. It's also a properly structured EPLI policy is going to have third party coverage, which is also going to protect you for anything your employees do with a consumer or customer, right? So that's important. There's directors and officers. If you happen to be on a board, there's E&O. So there's all these other things that are going to be, again, conversations that you need to have with your agent to find out, do we have a need for this? Or what we always recommend is if you don't have a need today, a strong need, but you're going to, we might put a policy together for you now. The cost is going to be very minimal, but it can expand as you grow into those as well. So a lot of stuff to consider.
Yeah, well, and that takes us into our next question is, how should insurance change as your business changes and grows and that kind of a thing? I mean, do you guys recommend, a semi-annual, call with you guys, a yearly call once a month, that kind of a thing? Or is it really, it seems to me more like a case-by-case basis. How do you guys approach that?
Yeah, the simplest thing is we tell all of our clients, our business clients, that if anything in your business changes, or if you're considering any changes, just reach out to us for a quick consult on that. Let's talk about it. And that could be, it could be simple things like, you started your policy and you didn't have any vehicle coverage on there, but you bought a company car, right? Reach out to us before you buy the company car, or you're buying more equipment for your business, anything that's changing. So we say that, but business owners, right? Being a business owner myself, right? I know how many things are coming at me every day. So we say it and we encourage them to let us know, but we also know that realistically, they're probably not going to, they're going to forget.
Of course. Yeah.
So because of that, we do a check-in. Yeah. At the 6 month mark, almost all, I can't think of an exception to this. So let's just say all commercial policies are annual policies. So at the 6-month mark, we will check in with each of our clients and just say, hey, we're halfway through the year. Anything changed that we need to be aware of? Any conversations we need to have? And we'll do that as well. So it's really a partnership. It should be a partnership between the business owner and their agency, and they just need to be in communication. But yeah, things do change, and they change quickly with businesses usually.
Yeah. Well, yeah, and that's the concept of going 1,000 miles an hour is not lost on us. And when we work with business owners, that is almost a common theme amongst all of them. And the reality is, right, when you're having a conversation with your lawyer, or you're having a conversation with your insurance agent or that sort of thing, that is, I would say on the totem pole of items of importance on the business owner's things to do, that finds its way, much lower on the importance list than maybe I would like, or even Dave, I'm sure you would like. But the reality is, having those conversations as things are continuing to change really can be beneficial for no other reason than, I may tell a client, hey, look, you need to take a deep breath and we need to slow down, and let's just sit on this for a day or two.
Yeah.
Let's think about this. We don't gotta go as quickly as you may think. There is time, and we can work through this. And I think the concept of business owners going too fast and that sort of a thing, and that ultimately is where problems arise, is when people are going too fast, and you don't take the time to consider some of the things that you've got going on. And so I would say unsurprising once again that's an issue that's frequently faced, particularly as a business grows, right? Because you've got a million things going on.
Yeah. I was going to say, and I agree with you. It's, revenue is your number one thing that on your mind, front of your mind every day as a business owner, is how can I create more revenue, and how can I be efficient on my expense side? And, I don't know about for you guys, but for us, the time required to do it right on the insurance side is not much. Right?
No.
So, I mean, there's a lot of work on our side,
yeah.
But the amount of customer facing time we need to get the information we need and to do all that doesn't take long.
Exactly.
And it's like, how do I carve out enough time? How do I help that business owner understand this is actually really important, because it won't matter to you until it really matters.
Until it does.
Too late.
Exactly. Yeah. Well, I primarily, represent businesses from the transactional standpoint, right? When, either it's formation, or you're trying to figure out how to expand, or maybe you're looking to sell or something like that. And, I always tell clients, you're either going to pay me now, or you're going to pay our litigators later. If you're not thoughtful about these issues, and that is, unfortunately, it's just sort of the reality of a lot of things. There's a lot of risk when, particularly as business owners continue to do really, really cool things and expand and that kind of a thing. That's where risk pops up. And like you said, it doesn't become a problem until it does.
Yeah.
And that sort of takes us into our very last point, which is protecting a business's value through life insurance. Here is one of the things that we're going to talk about. And so I would say, this pops up into two main categories. First of all, there is the what we frequently see as missing particularly with small businesses who grow so quickly, and all of a sudden you're going a million miles an hour in a million different directions, is companies fail to get key man insurance, and then the other side of that is trying to figure out how to protect the company's value if the owners decide they want to, if there's a death of one of the principals. And a lot of times, if you don't have life insurance, either on the key man front or on the life of the principal, and frequently what we see on the life of the principal is just a buyout. With if you've got a shareholder agreement or a limited liability company agreement, and you've got more than one owner, you're going to want to have a buyout, and that buyout is going to be funded by life insurance. And so, Dave, I'll just throw it over to you to talk about both the key man considerations and then using life insurance to fund the buyout, stuff that you guys frequently see with respect to those two things.
Yeah, you bet. And I'll keep it pretty high level here, Caleb, because we could do a deep dive and take 3 hours, and nobody wants to listen to that, I promise.
Yeah, exactly.
So let's start with the buy sell. So we do see way more often than I would like to, we see businesses that are, obviously, we're not talking about sole proprietors here, but we're talking about partnerships of some form. We see way too often that they do not have a buy-sell agreement in place. And again, it goes back to what we said before. They're trying to start a company, build a company, and grow a company. They're not thinking about what happens if one of us dies, right? I mean, who thinks about that? So we bring that up, we talk about it. And so when it comes to that agreement, ultimately what we're saying, get an agreement in place. And then once you have it, because if you don't, in absence of that agreement, you're going to become partners with somebody you don't want to be partners with. Yep. And that's your partner's wife or your partner's whoever, right? So get it in writing, agree to it. Have an attorney help you draft that, determine how you're going to value the business, do all that stuff. And then the life insurance is what is going to fund that buyout, because most partners don't have $500,000, $5 million sitting around just to fund it with, right? So that life insurance plays a very important role there for sure. It's an inexpensive way to do it. There's a few different approaches. You can do what's called a cross purchase plan. You can do a cross endorsement plan. You can do a entity purchase or stock redemption plan. Those are all things you can talk about with your professional life insurance professional, but they're all great ways to do it, pros and cons to each. But it's something that is it's a very inexpensive way to fund that buy-sell agreement. So that's
and on that point, I would say it's really, really important to to have the conversation with respect to the buy-sell, along with where you see your business going and what it looks like in the future, because frequently what you have happen is, a company, a buy-sell structure, if you've got, a services-based company and you've got two owners, is pretty simple. Whereas if you've got, 4 owners and you're going to have multiple entities, one entity is going to own the dirt, one entity is going to be, the actual entity that's performing the services, then there's going to be some formal arrangement between those two entities, but everyone's owning the same thing. How you fund the buyout with life insurance from that perspective is a lot more complicated. And that's one where, all right, well, we got to kind of dig down deep and really figure out what's going on and how we do this in the most efficient manner, because you can't just have, where, everyone's got, you don't want to end up with 16 different life insurance policies. And there is, like Dave was saying, and this is one thing that the more that I have worked with Dave over the years, is there are some really, really great products that you guys can help clients put together that make it really, really efficient and end up with a product that doesn't require, like you said, 16 different 16 different policies to accomplish the same thing. So
yeah, no, it can hurt your brain sometimes, but it's but again, it goes back to what you said. I mean, if you take the time and do the planning on the front end, then it's easy. The execution's easy from there. So so that I think that's enough. Probably I don't need to say any more on the the buy sell side of it. On the key person, that's a really good one. Because I think every business with employees, they probably have one or two or three people that, shoot, if I lose this person, that's going to be a massive disruption, right? And it's going to be disruption because the work they were doing isn't going to get done. It's a disruption because to replace them, it's going to cost me probably a lot of money to replace them. I got to hire a headhunter. I'm going to probably have to pay a signing bonus to get someone to come over. I'm going to have a learning curve for this new person. So all that distraction is going to have a negative impact on my revenue. So it's all these things that we don't think about. It's like, if something happens to Bob, well, that sucks. I got to replace Bob. Well, it's more complicated than that, right? So you can definitely try to monetize that and say, what would it cost if something happens to Bob? What's it going to cost me to replace him? From hiring a service to do that. What's it going to cost from a signing bonus? What kind of salary am I going to have to commit to over and above? What's the disruption to my revenue going to be? Try to come up with a number, and then you can put together what we call a key man, key person life insurance policy on that individual. Now, the way you can do it you can also tie that to kind of an executive compensation plan too, where there's some living benefit to Bob. There's some golden handcuffs to Bob, right, to keep Bob around. So there's some ways to structure that take care of you as a business owner, so that if something happens, you're not in a tough spot. you're still going to be a tough spot, let's be honest, but it's financially, it's not going to be as tough a spot. And then also it gives Bob some other incentives to stick around. So
Yeah.
Cool stuff we can do there as well.
Yeah, well, and I think this all goes back to the, to the point of, trying to protect your business in every way possible. And there's never, there's never an absolute ability to protect yourself against, any and all contingencies. But these are, some of the things that we've talked about here today are, I would say, just some of the ones that we see most frequently, and that we find are really actually pretty easy to take care of if a business owner is intentional about acknowledging that there is an issue and just picking up the phone and calling. Yeah. And so to that point, Dave, I really appreciate you coming along and being here, and like I said, you have taught me a whole heck of a lot about, the way that insurance works and the way that you guys do it. And, for the folks that are listening, I would 100% recommend, for all your insurance needs, reach out to Dave at FirstMark Insurance. There are some first-rate folks over there, really, really good at what they do. And obviously, you've got the contact information on the screen. So if you guys have any questions, also feel free to reach out to either of us. But Dave, I think that's all I got. Any closing remarks from you?
No, I think we covered a lot of good ground today. So just thanks for having me. It's been a pleasure, and look forward to helping anybody we can.
All right. Very good. Thanks, sir.
You betcha. Thank you.